Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 26th of January, 10:30 in the UAE time, and we welcome everybody. The oil opening in Asia at the moment, little trade. We're still sort of stuck in that tug of war in the middle 80s. It's kind of that time of year where there's no wind in the ocean and the sails are a little bit flat and waiting for direction. Let's kick off this morning with Ole Hansen, head of commodity strategy at Saxo Banks. Ole, where is direction? Where is the wind going to come from in this market to give energy markets, oil markets, a definitive direction? We sort of started the new year clearly from the low point of below 80, and it sort of recovered back to sort of the trend level, if you like, from recent weeks. But what will blow it in either direction now, do you think?
Well, good morning, Sean. I think actually the wind is not that quiet. I think it's just basically blowing in from both directions, keeping it a little bit rudderless right now. We got the themes are well known. It's the recession risks still rising through the data we're seeing, economic data we're seeing coming out, especially just recently from the U.S. It is the sanctions against Russian diesel and fuel in general from next month that's also playing its part. It's U.S. having stopped supplying strategic reserves into the market, but at the same time we're seeing inventories rise, and it's obviously China. How strong will that recovery be when they're back from their holiday? So I think there's plenty of development still having an impact on prices from either direction. But right now, as you rightly say, it looks a bit rudderless. It looks like we're getting some resistance here in just ahead of 90 in Brent, and we probably need some additional economic support from China, I'd say, in order for that to be taken out.
Let's welcome Laurie Hatayan, MENA Director of the Natural Resource Governance Institute, now living in the luxury of Brussels, I believe. So happy New Year, Laurie, to you. And we no longer have the pleasure of those funky paintings behind you. We now have very cool photos. Laurie, what does seem to be absent from this oil price or from the sort of general narrative of 2022, it seems we've left geopolitics behind us. We're now in the lovely land of all is well, and there is, despite a war and Erdogan not allowing Sweden to come into NATO, and Iran and nuclear talks are dead, and all these other things that we got very obsessed with during 2022 seem like irrelevant now. Are we sleepwalking at the moment? Your thoughts?
So good morning from Brussels. Early morning, dark still, but
yes.
But as everybody said, we made it through winter. So I think it's just it's going to come back. It's like now, as everybody's saying, that was this. If you want the transition between 2022 and 2023, everybody was focused on what will happen to Europe and the winter in Europe, and then that was a mild winter. So that was the focus, that we were expecting a really a big crisis there. Since the demonstrations that started in Iran, the JCPOA was almost dead. So that's why no one was talking about it. But now, going forward, when you see that Iran is selling a lot of its oil, that might be something that will come back, discuss what's happening in that front. Is the US really letting go of that? How much of what will Iran do? Will Iran stay just focus on inside what's happening inside, or will it do something so that the whole Iran portfolio is back on track? So again, that means that will they do something external through Yemen, through Lebanon, to bring back their own thing on track, because no one is talking about it, but it is still alive, as long as there is no, you cannot let Iran free, since we know that they're really after the nuclear armament and nuclear bomb. So what to do? So it might come, it will come, I guess, one on the table. Turkey with the elections again. Turkey having elections in May, so Erdogan possibly everything is possible with him so that he can win another round of elections. So again, that will have implications on the geopolitics. So Libya, Syria, even like what's happening with the EU and Sweden. So Turkey is going to be back and the geopolitics with it. So I don't think that we are going to get away without like discussing geopolitics again.
Ali Al-Riyami, consultant and former Director General of Marketing at the Ministry of Energy and Minerals, Oman. Ali, Happy New Year to you. OPEC Plus must be quite content with this sort of stability of some description and yet not being in the news. Are they happy with this level? Won't do anything to change it?
Well, we are not members of OPEC, Oman.
OPEC Plus, OPEC Plus.
Yes, OPEC Plus, but we are happy. In Oman, we are happy. Anything above 80, 85, 90, it's always good for Oman, and it's good for the budget. But yet, I think I agree with my colleagues. The uncertainties are still there. 2023 started okay, but I think there is a lot of issues and a lot of uncertainties either in the geopolitical area or also in the world economy or China. So we will have to wait and see what will happen the coming few months, especially that we have, I think, important meeting, OPEC GMCC or GMMC, sorry, meeting after 1 week from now or maybe 10 days from now. So I'm sure that all of this will have an impact in the market. Of course, we have to focus and to really understand what is happening in the geopolitical area. I heard, my colleague here talking about Iran, about Syria, about Yemen. But I think the issues are still there. Iran is quiet at the moment. They are focusing more in their internal issues. But I think, supporting the Russians, supporting the others in Yemen is still an issue, and it's still very hot topics in the world. So let's wait and see, Sean, at the moment. And I'm sure that the coming few days, few months, the picture will be more clearer. Back to, the Chinese New Year will end maybe after a few days from now. So that's also an indication of a growth, maybe, inshallah, in China. We wish them all the best. I'm optimistic. Like I said, the previous interview, I'm optimistic, but we have to be cautious.
Ole, nobody seems to be screaming for more supply at the moment, and indeed, most forecasts are saying that supply will exceed demand in first half and then reverse in the second half. Everybody, I think, being quiet. India is enjoying all of its very cheap oil and doesn't really want to say much about it. China's enjoying all the cheap Iranian and Russian oil, doesn't really want to say very much. There's nobody really screaming for more oil right now.
No, and that's also what the curve is telling us. We have a market that's reasonably well supplied. We're still coming out of the winter low season period. We still need to see a pickup from China in earnest. So yeah, we've got a well supplied market both in oil and in gas. One place where there is some concern, I think, is still in the fuel product market. If we look at the gains so far this year, it's really been driven by diesel, and especially diesel, but also gasoline prices. So these are up 5 to 6% on the months, where we got crude oil trading close to unchanged. So it really looks like that's where the focus is going to be, I think, over the coming months, especially with the embargo on Russian fuel exports. What kind of impact that will have, because there's no doubt that India, China, and others will happily pick up very deeply discounted Russian barrels of crude oil. The question is more whether they actually want that diesel or gasoline, because they can refine that themselves and create the revenues domestically. So that's going to be interesting to see what kind of flows we're going to see coming into February.
Well, you could in essence, see more crude coming out of Russia that isn't being used to be converted into diesel, so they've more crude oil available for the international markets.
Either that, or they simply not. If they don't have the customers for it, they'll have to reduce production. So it could go both ways. They're obviously finding ways to get oil out of the get the exports of oil still going. So it could be either. If they don't find the demand for the crude oil, then obviously they will have to cut production. Then suddenly we could see the market tightening more than expected. So it will be having quite a bit of impact over the coming months.
Laurie, I wanted to dig a little deeper into your thoughts about Erdogan's sort of negotiation here, particularly on the NATO piece, sort of holding a line against Sweden and to a certain extent Finland around this idea of their support for Kurdish rebels, and as well as the sort of silly actions that we're seeing recently of burning the Quran in Sweden. But where is there red lines here for Erdogan, or is everything a negotiation?
Look, there was an interesting article that I was reading, like since like sometimes Erdogan doesn't believe like in NATO or his presence in NATO, and Turkey's presence in NATO, it's just like like the advantages that he takes, but keep on doing what he's doing. Like he has been a part with NATO strategies, politics, not aligned with them, etc. But at the same time, he's using it in his advantage, saying that I can negotiate with Russians, etc. So what he's trying to do, basically, he was trying like to put one foot there, one foot there, like to play all the cards in his hand. Now I think focus is on elections. So May, in coming months. So he will be very. He will show to his public that he's very tough on issues like Sweden, issues like who goes into NATO or not, who goes into EU or not, because he feels that that will show that how powerful Erdogan is and Turkey is in international politics. So he will be very tough on that issues. At the same time, he will show that he is able to play that negotiator role between Russia, Ukraine, and he has a say in Syria and even in Libya, now pushing for elections again, like there should be elections, there should be like one government, all of that. So all of these issues are to show his public that Turkey, so Erdogan for years now, that he is the man, the international man able to play an important role so that he can win the elections because, as you know, economically, they're not doing very well, but he can't do much about the economy. So this is how he's going to play international cards all over. And I think it's for NATO to decide, like, okay, what to do with countries such as Turkey. And it's more on EU, on the NATO's court than in Turkey. Turkey is doing everything, and if they're getting away with it, they'll continue on doing it. So I think it's NATO to decide like what to do with countries like Turkey.
Ali, what, just again onto the other side of the geopolitical stress point in the region here, what does a end of the nuclear talks in Iran mean? We've pretty much have acknowledgement from all sides that it's pretty much dead. We're now not far away from getting swallowed into a US presidential election cycle yet again. What does this sort of suspension, this sort of freeze in the global engagement with Iran on the nuclear talks mean for the region? Can we just accept the status quo and all be quiet? Is this problem solved?
Well, actually, of course not. I mean, the problem is not solved yet. Until we sign the agreement, then everything is possible. But you know, Sean, you've been in the region now for decades, and you know the situation and how it's you know the political situation in the region and how the reaction that normally happens when we have this kind of situations. So the nuclear deal or nuclear issue is not something new that. We've seen it just last year or 2 years ago. This is now for almost like 7-8 years. So since the last time we've signed or Iran signed the agreement, it was always an issue. So I don't see that there is a solution out of this. But this is like you know, like a card that Iran or the USA and the Europeans use it when they need it. So I don't see any solution actually out of this crisis. Soon. And it will continue, by the way. It will continue for the coming 3-4 years, maybe. I don't know if everybody is serious about solving this issue, either from Iran side or even from America and Europe side. I think both of them are happy to have this kind of status quo. And let's just wait and see when can we use the card again, and what is the situation that we will apply when we can use the card again. So we are not happy, of course. The region here is on the limbo. I mean, we don't know what will happen. We have Iran, who is ready to work with his neighbors, where the neighbors, they are not ready to accept the friendship with Iran. So this kind of situation, it was there 10 years ago, and it will continue for another God knows how long. But going back again to Ole about the Russian issue, I think this is one of the uncertainties that I'm talking about, because Russia, until today, I think they haven't yet mentioned officially what is going to be their political position out of the caps and also the embargo on oil to them. They haven't yet announced anything tangible at the moment. We just hear that the President Putin say we will do this. Novak, he says we will do that, but there is no enough evidence in the management or the government of Russia of what is exactly are they going to do towards the caps that they have been implemented, and also the sanctions on oil. So we were still waiting to know exactly what is the reaction from Russia, and this is one of the uncertainties. The other one is the economic problems and economy growth in the world is also the other thing that we are still need to know exactly what is the situation at the moment. And OPEC JMMC meeting next week. I mean, there's going to be a very difficult studies and very difficult decisions that they need to take.
On what?
On production. I mean, are we going to keep the production as it is at the moment, 2 million cuts, or should we increase the cuts, or should we reduce and increase more production? So there will be quite a few numbers of issues that they need to discuss and also to come up with a solution. But my opinion, I think the market is not yet ready for any extra volumes. I think we have enough volumes, and like my colleagues have said, Iran is exporting. Americans, they allowed them to do that, and Russia, they're still exporting both either pipelines and also sea oil is moving around. So let's just wait and see what is the situation will be in the coming few months.
Yeah, more a second half of the year issue, and when exactly does China start tangibly growing at that sort of target 5+% that's forecast for this year. Let's go to the survey question, which is a fairly simple question, but nonetheless full of sort of thoughts behind it. What level will Brent break through first? $80 or $90? We did see 80 break through the floor on 80 at the turn of the year. And we thought we were going to get to 90. It would have seemed late last week, early this week. It hasn't. It hasn't got there. But my question today is: what level will Brent break through first? 80 on Brent or 90 on Brent? Ole, your thoughts? I mean, we mentioned obviously we have the OPEC Plus meeting coming. We also have the next sort of steps, which I think is one of the big sort of fog areas, is on the central bank policymakers, the whole peak rates position. The markets are definitely embedding in the fact that we're near the top of that cycle. Do you anticipate any surprises there?
I don't think so. Not as long as the data continues to support the Fed just going a little bit more cautious. I think they're also watching the deterioration in some of the numbers coming through. They're watching inflation coming down. So I think at this point they're probably fairly happy with developments. So we can see the market right now. They're sitting between two chairs, basically pricing in 1.5 rate hike to follow before they pause. So I think this market at this moment in time, whether it's 1 or 2 doesn't really make a difference, but it does show that we are heading for a period of where the central bank will pause. We saw that yesterday from the Bank of Canada. They have been kind of leading the Fed by a few months during this rate hike cycle. So if there's anything to go by, then we will have a pause for over the coming weeks, and that obviously is some of the one of the reasons well that some of the asset prices are receiving a lift. We got stock markets trading up, even so though some of the companies are coming out with earnings that are not as stealthy as they've been in the past.
On that point, Ole, of the sort of pause, as you call it, or I would tend to use the word plateau. We get to the plateau level of the rate cycle, which is in some ways back to historical average of around 5% on the Fed rate. What is the ramifications for that from the point of energy consumption, commodity consumption, if it stays there? I mean, if the economics outlook remains somewhat benign and we don't have a deep recession and there's no real need to cut rates in any savage way, what's your expectation? Because that's where there does seem to be a divergence. The market's sort of expecting the rate cycle to come back off, and the Fed is signaling, no, we're staying at this plateau.
Well, I think the forward-looking, the market most certainly is looking for rate cuts sometime, well, almost starting late this year, and that's also some of the models that the economic growth is priced upon. I'm probably a little bit skeptical there because I think we're seeing now the renewed push high in commodity price. We're seeing wage growth starting to become an issue. We're seeing China. If China really comes back firing on all cylinders, that will be inflationary as well. So I think the Goldilocks scenario that but inflation is done and it's going straight back down to 2%. I don't think that's what we're facing. I think we will come down quite rapidly over the coming months, and then potentially just starting to move higher, somewhat higher again, and that will prevent the Fed from really getting too aggressively in terms of hiking or cutting rates once again. But I think economically we can probably manage with these levels. We've seen that in the past. There are obviously parts of the economy that has been fed on very low interest rates. That those sectors have to adjust, and that adjustment is ongoing as we speak.
Laurie, meanwhile, the war continues to rage in Europe, and the big announcement this week, I mean, I think is a massive shift. I mean, and exactly a year ago, Germany said they were going to send 5,000 helmets to the Ukrainian army to help them defend themselves against the Russian invasion. A year later, they're sending their Leopard tanks. I'm wondering, from the perspective of escalation, should we be paying more attention to this as we come out of winter? This war heats up again.
Look, definitely it's a big story that finally Germany accepted to send the tanks. And the Russians were not happy. But I think the Germany has been a bit disappointed by the Russian reaction, especially using oil and gas against Europe and against Germany, because the whole strategy and the whole philosophy of Germany that more collaboration with Russia will really make Russia neutral or not use the gas against them, at least, because kind of it was personal against Germany because it was the country that was taking most the gas, etc. So since then, I guess gradually the sentiment is like, why are we still taking into consideration Russia and what Russia, and not to alienate too much Russia when Russia is not taking any consideration. So this attitude of sending the tanks is like, now that's it. What can Russia do more than what they've done? So when they invade Germany, is it that is what is left now, because they've done everything economically, or they would do so? I think.
Well, they could cut oil exports by 1 million or 2 million barrels, and you could see a very big oil price come and cause havoc with inflation and economic recovery. I mean, there is things they can do beyond the military field.
Yeah, so let's wait and see, because at the end of the day, like Russia needs the money as well, yeah, right? And Russia needs money from oil and gas. From where would they get money? So it's not straightforward. But again, I think we're entering into the second year of war with this like kind of like, this is a sign that maybe this is the offensive now, so that Europe is going into like attacking Russia and not like defensive all the time because of the tanks. Let's wait and see. But definitely, I think at the same time, like just like to reflect on the second entering into the second year, I think it's interesting. At least this is what I'll be monitoring. It's what Italy is doing with North Africa and with these deals with Algeria and with Libya on the gas, and really pushing Eni to do all these deals with North Africa to increase the gas production from North Africa. At least like this is Eni is doing. So Eni is really it's benefiting from this war to really sign these lucrative deals. That's interesting for me. Like this is the other story. These are the other stories of the war and the impact of the war, about like how companies and some countries are taking advantage and pushing.
Well, certainly Eni seems to be the company of the last few years. Even in Oman, they're enjoying some success across the Middle East and other discoveries, particularly on the gas side. Ali, let's give you the last word this morning. Let's get the survey result as to where this room thinks the next sort of level breakthrough would be. So this is a somewhat bearish room, and we'll post that question on social media. $80 rather than 90 seems to be the more likely next threshold. The building of inventories is a sort of narrative we haven't really paid much attention to last year, other than the sort of depletion of SPR and so forth. Moving forward, Ali, do you expect that inventories could become, the rebuilding of inventories could become a bigger story?
Well, if you're talking about America, yes, it's going to be a big story. But in Asia, I think they have already built up their inventory from a few months from last year. Actually, from September they have started, and they have enjoyed basically the prices that they were quite low at that time. So I think for Asia and China in particular, that the inventories are almost done. But the Americans, yes, I mean,
with that cheap Russian oil and cheap Iranian oil.
Yes, and yeah, they take the advantage of that, and they have benefit out of that. But the Americans now they've started already getting starting to fill in their tanks, their strategic tanks. So I think it is going to be an issue, but I don't think it is going to impact the market too much. Don't forget that the Americans also, they have their own production, and but nevertheless they still need some quite a few millions of barrels from outside. But I think it will not impact the price or the oil, the flowing of oil around the region or around the world very dramatically. So I still believe, and I remember that you have commented on this before when I said that I'm optimistic, but I don't see the prices next year or this year now that is going to go 110 or 105. I think it is going to continue being below 100, either maximum 95 or maybe close to 100. But I don't see, unless, of course, like you said, that the Russians, they decided to reduce their production or to cut their production to around 2
to weaponize oil in the same way they've weaponized gas.
Absolutely, and that's what I've said. I mean, we are still waiting to see what is the reaction from Russia. What we see now, it is just a small kind of news here and there, but the big thing is not yet there. So we are still waiting to see what is the reaction from Russia, and I think they are just waiting to see what is the impact, total impact to them when it comes to their economy and the growth and the GDP and so on and so on. That is my reading at the moment, and I don't see any kind of dramatic crisis in the oil market soon.
Well, on that point of inventories, with the refining season, refining maintenance season coming in the not too distant future, we could see the rebuild of U.S. inventories and that sort of acting as a kind of a downward pressure on prices, as long as demand, global demand, remains somewhat sober and is delayed into the second half of the year. So some softness there from a rebuilding of U.S. inventories. But we have to wrap it up. Ole Hansen, thank you so much from Copenhagen. Laurie Dayan, welcome to Brussels. What, are you there permanently now? Just a quick update, if I may.
Permanently, at
Okay.
least until like I'm staying here until I can afford it. I'm not then.
Until we didn't even talk about Lebanon, with some developments there as well over the last few days. Another day, but nonetheless, Beirut remains in a challenged space. Ali Al-Rayami, thank you so much from beautiful Muscat. All the best, everybody. Every morning, 10:30 UAE time. Take care.
Thank you very much. Have a nice day.